Hi all, welcome to another video. In today's video, I am going to talk about narratives. As you all know, the Indian market, primarily the index at least, both Nifty and Sensex, had not given any returns in the past 2 years, and it is lagging behind other Asian markets and other global markets. And we all are talking about the underperformance of Nifty from a broader level, right? So, how narratives are made around the historic returns of Nifty and other well-known stocks is actually puzzled me. So, if you take currently the Nifty levels where it is in, if you take the 5-year historic CAGR returns, it is around 8.5%. In the last 5 years, CAGR return for Nifty. If you take 10-year returns, CAGR returns, it will be around somewhere 9.5, 10. You can say 10%. My point is that how flawed that analysis, because we all know that Nifty made an all-time high of 26,300 few months back. Currently we are trading, Nifty is trading at 24,200 levels. Obviously we are around 2,000 points away from the all-time high that we have already made, and currently Nifty PE is around 20, which is, if you take 5-year or 10-year average, it is somewhere in that range, moderately valued. And last quarter, the Q1 results were pretty good compared to last many quarters, right? And the companies are expected to give more returns in the upcoming quarters as well. My point is that if you calculate when the Nifty levels are down, if you calculate the CAGR returns, it's obviously going to be less, 8 or 8.5%. Say for example, in the next 3 months, Nifty is rallying another 3,000 points, let us assume, and break all-time high and move past 27,200 or something. Imagine that in the next 3 months. The CAGR returns, what we have seen, 8.5, will directly shift to 11%, 11.5%. And by end of this year, if Nifty touches 28,000, the CAGR returns will be 12%, which is the historic average if you take, much more than a 12-13% range, right? So when the Nifty levels are down, making that analysis and coming up with Nifty had only give 8.5 or less than 9% CAGR returns doesn't make any sense. In that case, if you take the Nifty that had rallied like anything post-COVID during the 2020 till 2021 October and even during the 2024 election time, in that time, if you take the 5-year, 10-year average, it will be 14-15% because Nifty was rallying like there is no tomorrow. So that's why I was saying this is a narrative that has been made. Not just Nifty, I can take another example of many individual stocks. Say for example, ITC. People are saying 9 years no returns, right? 2017 levels ITC, currently ITC is trading in the 2017 levels. But ITC had gone down to 150 levels during 2020 June, July, August time. And from there it recovered and rallied till 510, 520 levels. That is like a 3x returns in 3-4 years. If that was the case, you could have invested when the price was so cheap. At that time, the PE multiple, the valuation also was so cheap. 12-13, ITC was getting a 12-13 PE during 2020 COVID time. Why don't you invest at that time? If you would have invested, your money would have tripled in 3-4 years. That is like a 30% CAGR returns. And from that peak, ITC had come down. And when the ITC rallied, I'm not saying that ITC had given stellar growth. No, the company had given only moderate growth. I'm only talking about narratives. Right now people are saying 9 years no return, but why not address the fact that it gave 3x returns during that 4-year time frame, right? And from 520 levels, now it's almost corrected 50%. That is also a reality, yes. There is no growth and PE multiple has been derated, right? Now ITC is trading at 17 PE. At one point it was trading at 31, 32 PE. Similar is the case with all stocks. I recently saw a analysis even in the famous stock market news channel and in papers as well. How HUL, ITC, Coal India, etc. stocks are underperforming, right? Yes, they are underperforming, but I barely see them saying these stocks give stellar returns when they actually give, right? Even in Hindustan Unilever's case, last 5 years, no returns, agree. But in the last 10 years, if you take, there are instances where it was trading around 800, 900 levels around 9 years back, and it had touched 300 level, 3000 levels 2 years back, I feel. So that is again a 3x returns, right? So also Hindustan Unilever was trading around 80, 85 P at one stage, and currently it is trading around 35, 40 P, I guess. So if the company is not giving growth, their PE will be derated for sure. The point is, why do you invest when the PE ratio is so high, right? So in most of the time what happens is this is the case. When the market is exuberant, everything is going well, right? We all want to invest. Oh, the P ratio will go skyrocket, but nobody cares those things. But when the market actually corrects, when the stock corrects, the PE derating happens, then these kind of narratives will come up. The other point is that there are stocks that had given stellar returns even after having high PE. For example, Titan, classical example. Why Titan is giving good returns year after year? Because Titan is giving, the company is providing stellar growth year after year. I think if you take last 5 years profit growth, it is 40%. If you take last 10 years growth, it is close to 25%. So that if the company is continuously giving profits, definitely it commands a premium valuation and the stock will rally. That is also happening with other new age companies where the companies are giving good results. But if you see the PE ratio, it is in 3 digits, right? 300, 400 levels. So that's not my point of discussion. My point of discussion, it is unfortunate that people are bringing this kind of narratives when the market is actually down and saying that we are not giving any returns. See, stock market investing is for long term, right? You cannot expect year after return linear returns from stock markets. It's not just in India. Even if you take some of the best stocks that have given crazy returns in the last many years, if you take Nvidia for example, I have talked about in one of my previous video also. From 2000 till 2015, you see the Nvidia chart. It is like a straight line. Barely Nvidia gave in return. That is the case with all other stocks. No stock will ever give linear returns. If we are looking for linear returns, expected returns, then we should invest in fixed income asset classes like FD, right? Equity means risk. Equity investing is risky. We all know this. The people who talk these narratives, they also know this. But yeah, like I said, it's unfortunate that I don't know for the news value or anything. The point is, what value are you going to provide for the new investors who are coming into the market? This narrative should not be presented, right? The correct narrative will be stock market returns. First of all, stock market returns are lumpy. Stock market won't give linear returns. There will be years of underperformance that will be compensated within 1 or 2 years. All the loss will be compensated. And also stock market investing is risky. There is a chance that if you are investing into individual company and if the company go bankrupt, you will lose your money. These are the discussion that we need to have. And unlike fixed income asset classes, the returns are non-linear. You can make stellar returns if you are on the right side, right? So that's the kind of discussion we need to have. Not like Nifty gave only 8% returns in the past 5 years. Yes, Nifty gave 8.5% return because Nifty itself is down 2000 points from the all-time high. If it breaks all-time high and go another 1000 points, it will be 12%, close to 12%, which is the expected return, the long-term expected return from the index, right? So I want to talk about that, the kind of narrative that we are seeing. It shouldn't have happened. Uh, Hope you are clear on what I have just talked about. If you have any similar point of view, or if you disagree on something, please comment below. I'm happy to uh, see different kinds of views on this. But my last point that I want to make is that if you are a long-term investor, these all are noise. Don't give too much importance to all these. Stay put, stay invested. Eventually market will return. Eventually market will recover. And if you take the long term, right, definitely you will be benefited from the markets. So have patience, have conviction, have belief in India growth story, or wherever you had invested. No, I'm not just talking about India, even any part of the world, I would say. If you are into equity, think long term, you will be rewarded for sure. If you are someone new watching this YouTube channel, please consider subscribing to this channel. I will be talking about mostly about stock market and personal finance related content. I will come up with another video. Till then, bye.